Hello and welcome to MasterChartsTrading.com market recap for the week ending Friday, February 27, 2015. This week, major indices hit all-time highs again, but pulled back slightly by Thursday and Friday. Bonds may have started their rebound after a 9% drop. It looks like gold have held support at a very important juncture. And gold miners that are even stronger than gold seem to be breaking out of a consolidation. And one of the examples of gold miners, which is turning outright bullish long term, is Newmont Mining. And strong dollar is pressuring oil and other commodities, of course. And breakout in natural gas that I highlighted last week did not materialize. Alright, let's go to charts. Before we continue, I have to read the disclaimer. All information in this video and on MasterChartsTrading.com is for educational and entertainment purposes only and shouldn't be construed as a recommendation to buy, sell, or sell short any of the said securities. Alright, so S&P 500 chart. This is a bullish chart. Our latest entry was on February 5th, and let me see, we're up about 2060 or so, about 3% or so. Right now, the upswing still continues, and I see no significant selling pressure just yet. We went ahead and took some profits just to lock in some of the gains in this position. The next chart I'm showing market breadth. So advanced decline line, advanced decline volume line hit all-time highs, and the price confirmed the all-time highs. So I see no divergence in the advanced decline line, advanced decline volume line, and the price itself. As far as momentum of the breadth itself, you can see it kind of rolled over a little bit to the downside, and that's normal. We had a pretty steep advance here. We haven't, for example, you can see here that when it rolled over below its 10-day exponential moving average, then we had our decline. We haven't gotten there yet, so I think there's still upside potential for this move. And one of the ways to measure the move is, you can see from October low to December high here, and then this same thing should be duplicated on the upside here. Of course, it's like it's called a measured move, so it's not 100%. All right, elsewhere, S&P 500, the market breadth indicators. So percentage of stocks above the 20% exponential moving average declined a little bit, and that was to be expected. So you can actually notice, it's interesting, the decline started a little bit earlier. In the decline in the exponential moving average percent of stocks started a little bit earlier than the actual decline in the price of the index. So that's like a nice tell right there. But it's still in the bullish territory, and plus the percentage of stock above 20 EMA is quite a volatile indicator, so there's a lot of movement up and down. As far as the percentage of stock above 50 EMA and 200 EMA, they're still in a positive territory. And the bullish percent index, same thing, it's in positive territory, it's above its 10-day exponential moving average, so it's still bullish. All right, let's look at bonds. TLT, 20-year Treasury bond fund. So TLT came down pretty hard, like around 9% from a February high here, but then it consolidated with several inside days highlighted last time, so this is a long stick, and within it contained all of the previous sticks. And here you can see it broke out right there out of this consolidation. And then now it looks like it's testing this breakout. So far it's holding, and I actually went ahead and bought some right there on breakout. And I'll probably add more to the position once there is more upside and continued upside pressure in the bond market. You know, bonds are bullish, obviously, because the price is above the 200-day EMA, and you know, they've been on an uptrend for more than a year, actually. So this could be just viewed as a correction within a bigger uptrend. Let's look at gold. So gold, very interesting, I thought. First of all, from the low in November to the high in January here, you know, it's a pretty sizable move. So gold was entitled to a correction, and it did get it. And see this blue horizontal line, the Fibonacci retracement lines. The gold did correct just, you know, to the 61.8, 62% retracement area, and then rebounded. And there were several hammer candlesticks here, this hammer, which indicated that there was some significant buying pressure here in this area. So I'm going to call this, you know, for now that the support has held, and it looks like we have a rebound in our hands. So this is not bad, you know, this looks pretty, you know, bullish to me from a very short-term kind of point of view. Long-term, gold's still in a downtrend. So to reverse it, the downtrend, it needs to close like around 1400 or so, maybe 1350 or so. It hasn't happened just yet. But this is an encouraging sign, and as long as this rebound continues, we could, you know, break out above this resistance. Of course, the next resistance is right here in the 1250, 1260 area, so which is like this 200-day moving average, and this resistance from this peak as well. All right, let's look at gold miners. So we did have a open position in inverse ETF, gold miners ETF called Dust DUST, opened around here, and I, you know, same thing actually, same thing with the Fibonacci retracement. The GDX retraced, you know, 50% of its move, and I actually predicted this as well. So there were several things in this $20, $21 area. First, this red line is the 50-day moving average, and you can see it held support right at it. And this was my first, you know, tell, is that these 2 days I was expecting, you know, breakdown below the 50-day moving average, but it didn't happen. So I went ahead and took profits here, and then I closed position right here. It's because, you know, this is a definitely a not a bearish sign right here. It's you know, I'm not going to argue with a rebound and a retracement of this move. So GDX is looking better than gold. You can see that gold closed, see this red line, closed below its 50-day moving average, while GDX held above it. So this is an encouraging sign. Gold miners, GDX is still in a long-term downtrend, and I want to see a close around $26, especially on a weekly basis, to turn my opinion of long-term around to a bullish. Let me just update this chart, see if we get any new readings. No, I still got it. But in any case, it's probably going to be the same picture. So advanced decline percent went above its 20-day exponential moving average, so that's positive sign. And the advanced decline volume percent did the same thing. And you can see that this, see how here advanced decline percent made the lower low, while advanced decline volume percent made a higher low. So that means that the volume provided by the bigger miners were pushing, was more significant, and it looks like the bigger miners are what's driving this advance in the gold miners. So even though, see how you see bullish percent index, only 40% of the index is on a buy signal. Apparently it's enough to push the price of the index higher, even though many of the smaller miners are still struggling. So, this is just how it is. But one of the bigger miners I wanted to highlight is a Newmont Mining. And this is a candlestick chart with exponential moving averages. Right there, 50-day exponential moving average closed above 200-day exponential moving average. So this is one of the ways to determine if the long term a security is in an uptrend, and this definitely is a positive development. So it's gold Newmont Mining advanced together with the rest of the index, but now broke out above the resistance here. So definitely a bullish trend. It certainly is overbought, and it probably will fall back to like $24-25 area. But in my opinion, this could be a nice buying opportunity for the long term. Okay, and United States Oil Fund, our system generated a short signal on the oil, United States Oil Fund, on the February 24th. First of all, USO, United States Oil Fund, is in a downtrend, and this rebound from 2nd February, it was pretty sizable. It was like about 12-15% or so. But I think the bigger trend in oil is down. So to me, it makes more sense to short rallies in a downtrend in security. So I went ahead and opened a small short position in USO by purchasing a inverse ETF called SCO. And on the next chart, I'll show so light crude oil spot price. It's a little bit busy, but I'll go through it short one by one. So we had a big decline, and then we held support at the $43-44 area and rebounded. We rebounded to a logical resistance level from this breakdown, $54 resistance level, and from this 50-day moving average, declining 50-day moving average. The interesting thing is we tried to rally above this $54 for 3 times and failed. So, right here on the 24th, I think this is a breakdown, and that's where I went ahead and shorted it. Now, there is some consolidation here, and it will probably consolidate, but I'm betting that it will retest the lows of the January lows, especially if this price momentum oscillator rolls over here and goes to the downside. We may actually see new lows as well. And then finally, I want to show natural gas, which I highlighted last week. So natural gas, and right here I pointed out that natural gas seems to be breaking out above resistance. First of all, natural gas is in a long-term downtrend, so this is a rebound within a longer-term downtrend. In other words, a bear market rally. It broke above this resistance here, but then fell back immediately, and then even the day before on Thursday just collapsed like 5% right there. So bullish divergence didn't really work out, and I know, I mentioned that, this bullish divergences in general are kind of need to be taken with a grain of salt, especially in a strongly trending security, and this is definitely a strongly trending downward security. So natural gas, in the next slide I'll show that there was no signal. We came up, but there was not a significant pressure to trigger a reversal bullish signal. Like here, for example, it was a significant enough to trigger a reversal signal. Didn't happen here, so we didn't even open a long position, and this is still a shorting opportunity. All right, so with that, I wanted to show you how to find us on the internet. Go to MasterChartsTrading.com, and there we have our blog, and we post all of this information there. Also, if you click on public charts link right there, you can see links to the public charts page where most of the charts you saw today are located. Sign up for our mailing list by entering the email address here, since we are going to start a trading service soon, hopefully this year. And if you have any of the following Twitter, Facebook, YouTube, or StockTwits account, you can follow us there as well. That's it for this week. Thank you for listening, and have another great trading week. Goodbye.